Hey everybody, how's it going? It's Chris Flowers with Here's the Deal. Okay, today's episode, we're going to talk about tax write offs. It's tax season, so let's talk about the good, the bad, and the ugly. All right, now let's get into the show. Hey everybody, how you doing? I'm your host, Chris Flowers at Here's the Deal. And Here's the Deal is brought to you by Litchfield Auto. Okay, like I said, I've told you before, Phil and his team over at Litchfield Auto, been a customer for at least 10 plus years. I've had basket case BMWs. Okay, high miles, not taken care of by the last owner. Phil and his team kept all those on the road. Okay, I don't care what you got. I don't care if it's a Nissan. I don't care if it's a Mercedes. Whatever it is, Phil and his team over at Litchfield Auto, they're going to be able to keep it on the road. Okay, they're going to do it for you at a fair price. Okay, but one thing they don't do cheap, but they do excellence. So keep that in mind. I'm very comfortable. I have been very comfortable. I am very comfortable, and I will always be very comfortable recommending my family and friends to Litchfield Auto. You should do the same. Okay, now again, gonna apologize a little bit. Show's a little late. Obviously it was the Easter weekend. Praise God. Thank you, Jesus, for rising from the dead, saving all of our souls. Now, I said show was a little late though, because obviously I was busy at church and things like that. So I apologize for that. But one thing that we wanted to really get into, like I said, because it is tax season, is that tax write-offs can be a good thing. Okay, and they're great, they're legal, they're useful, but they're not always great for the long-term goal. Okay, now I'm not a CPA, not an accountant, don't pretend to be one, but I've been in the financial industry for going on 30 years, and I've seen this scenario play out 1,000 times where owners will get caught up into the tax write-offs. Okay, they want to, of course, nobody wants to pay the man. Okay, I get it. Again, the IRS sucks. We all know it. I know it. You know it. We can all agree on that. The IRS sucks. Okay, but it's here to they're here to stay. Now, how we got from throwing tea in a harbor, a few years back, to the tax code we got now, I have no idea how we got here. But then again, that's another story, another type of show, not this show. But again, how we're here now. So we got to talk about these kind of things. Now, tax write offs, again, it's a great tax strategy, completely legal, good to go. But when you want to do something like get a loan from a bank, especially for a building, now I'm talking about bank loans. Okay. I'm not talking about, there's all kinds of loans out there. Okay. I work with several different customers and we go into all kinds of things. We're going into purchase order financing, there's MCAs, there's accounts receivable financing, there's equipment financing. There's all different types of lending that you can do, and those lenders all have their particular things that they look for, and some could be much more shorter term, but they're going to be a little more expensive. Things like that. We're not talking about those kind of loans. If you want to learn about those kind of loans, again, I have every tool at my disposal for those kind of things. Contact me. We could talk about all those different type of lending, but the purpose of today's show is to talk about the long-term strategy for business owners and buying real estate. Okay, so to do that, you have to show positive cash flow on a tax return. Okay, because like I said, banks are not lending on EBITDA. Banks are not lending on, you know, you drove up in a Maserati. That's great, but if you're showing consecutive years of losses because your CPA said it was okay, which it can be, it's not the best strategy for you long term. Okay. Now, again, all my clients have heard me talk about this before. I like to advise my clients about getting into the real estate portion when you're first starting out. Yeah, you're going to lease your space and everything like that. We get that because obviously, it could be more advantageous, things like that. But you're going to eventually want to get to a point, okay, where you want to buy the real estate because it's an exit strategy. And if you're not thinking about exit strategies, you should be thinking about them from day one, let alone, I don't know how far you are down the road, but you got to think exit strategy. Now, if you own the real estate, okay, you can actually sell the operating company. So that way you don't have to work in the shop anymore, work in the office. You can sell that portion of it. They can pay you the rent. Okay. So now you could be off in Fiji, you could be out golfing and getting a check in the mail, you know, hitting your account because, they're paying you to lease. Okay. Think about that. I don't care if you're a pre revenue business right now, you want to plan for that contingency. Okay. This is what you want. You want to get to this point where you are buying the real estate. It doesn't have to be the place you're at right now. You can start out leasing a little shop, but start thinking long term. If you want to keep the shop right where it is, perfect location, things like that, you want to buy that real estate, great. But always have that in mind to start looking at buying the real estate as soon as possible because that's your that's your retirement income. Yeah, you can maybe get the big bag from selling the business if you're showing profits. You can do that. There's another hitch to the writing off everything. Okay, so you can sell your company for a bag, get that cash, and then you can also still receive um, the lease payments from the new person running the operating company because that's not going to be you anymore because you're going to be off golfing or, like I said, hanging out in Fiji chilling, right? Now, there's an old saying I like to quote Rocky Balboa: "If you want to dance, you got to pay the band. If you want to owe, you got to pay the man." Okay, that is true a statement as going to get in business. What does that really mean? What does that mean in English? What does that mean in non-Rocky talk, right? Let me explain it to you. He's saying if you want to dance, you got to pay the band. If you want to owe, you got to pay the man. Meaning, if you want to borrow money from a bank, okay, you got to pay the IRS. You're going to have to show, like I said, you're going to have to show that profit because they're going to be looking for what's called a debt service coverage. Okay. Now, debt service coverage, you know, it's generally 1.25 or better, depending on your industry, depending on the bank. Okay. There's a lot of contingencies in there. Could be, if they don't like certain industries like restaurants, things like that, they might want more. Or contractors or a garage, they may say, no, we want 1.3, 1.5. Who knows? I mean, it's completely up to them what they want to call for. Okay. And plus how long you've been in business and things like that. So that's something they're going to be looking for on a tax return. Okay. Now there's add backs and things like that. You can add back depreciation. You can add back interest. You can also add back in the rent. So say you're leasing now. Okay. The money that you're paying towards the lease, you can add that back in to the debt service coverage for the new loan. Okay. For the building. But again, you still got to show that you're making enough cash to where you could take on this new debt and debt service it at whatever rate and term that it is. And again, we're talking about bank lending. So, like I said, the rates and terms are going to, those are the best loans you're going to get. Best rates, best terms. They're harder to get though. So again, your paperwork's got to be in order. That's why I said hire a CPA. Don't even play this game like, oh, no, you're not. You're not doing these taxes yourself. Not if you now, if you want to do them yourself, or you want to go to Snuffy Smith down the street, get ready to hear that rubber glove snapping, because the IRS is going to come calling, and they're going to give you the old good old rubber glove audit. So enjoy that, or you hire a good CPA and you let them do it for you, and they take care of that. When you are working with a CPA, again, another strategy that I have, something I work with my clients with a lot. I say have an outside board of directors. Okay. The outside board of directors consists of your lender, which should be me. It should be your CPA, and it should be your attorney. Okay. Now, the CPA and the lender, like I said, we have that counterbalance. Okay. He's trying to get you all the write offs you can, or he or she. I'm trying to work with you to say, hey, here's how we can take advantage of this loan, get this building, move forward, things like that. So there's got to be the balance in between, and the attorney keeps you out of jail. So having that outside board of directors, is great. But remember, we work for you. Okay. You don't work for us. You don't work for the CPA. My CPA says I need to do this. Is it your CPA's company? No, it's not. Is it your attorney's company? Is it my company? No. Okay. You tell us the vision. We make the numbers work. Okay? That's how it's supposed to go. That's another show. Just, like I said, subscribe to Here's the Deal. Subscribe to it on YouTube. Subscribe to the podcast. Listen to wherever you listen to your podcasts, because we're going to cover that in detail as well, because it's a strategy I've been working with my clients for years. Okay? Just to get them to wherever they want to go. But it's your vision. You tell us the vision. We make it work. Okay? Different show. Now, the lender and the CPA, like I said, we got to start showing that debt service coverage. Now, to show that debt service coverage, you're going to have to show that you're making money. You have to show a profit. Okay? That means you will write a check to the IRS. Now, again, we want to minimize that as much as possible. But at the same time, it's also counting towards, like I said, the exit strategy as well, because what you're going to, what you may possibly run into, I've run into a million times, is that people will say, oh, my company is worth XYZ. If you took every write off you can take from the day you open to the day you want to sell it, and you never put yourself on payroll, you always took owner's draws because you didn't want to pay the taxes on it, and all this stuff, again, all perfectly legal, all US GAAP strategy, all the kind of accounting stuff. Like I said, I don't get into because I'm not a CPA or an attorney. But when you want to sell the business, it's not going to be worth nearly what you thought it was, because the tax returns aren't going to show it, and your balance sheet is not going to reflect it. Okay. So taking all those tax write offs, as legal as it is not always in your best interest. Get comfortable with the fact that the IRS is going to get theirs. They're either going to get it in the front or they're going to get it in the back. One way or another, they're getting it. Okay. Now, again, working with your CPA, working with your attorney, working with your lender, we'll try to minimize the damage as much as we can. The attorney's going to talk about putting stuff in LLCs and trusts and all that kind of stuff, different tax strategies there. Again, way out of my league. CPA is going to talk to you about, the write-offs that we can do. Well, like I said, manipulate numbers, maybe not take it as deep, things like that. So again, that's our job. You just got to tell us the vision where you want to go. Now, again, these are hard decisions. They need to be made. They need to be made up front. Okay, if you're already in business now, okay, you got to really sit down and reflect. How long do I want to stay in business? How much longer do I want to work? You know, and we got to start developing strategies. We got to start making this. We got to start, getting going down the road. And like I said, think of the exit plan. I'm going to keep harping on exit plan, because people, like I said, you know, they work and they work and they work, and they're like, 20 years down the road, then they're like, okay, I want to sell the business, like I said, and then all of a sudden they come up with, my company's not even worth nearly what I thought it was, because again, you just didn't want to, either you weren't paying attention, or you just said, hey, I just don't, like I said, I don't want to pay the taxes. So, it's either you're paying now or you're paying later. But again, one way or another, you will end up paying. So these are the things that you have to think about. It's tax season. Like I said, nobody likes it. This is the worst time of year for everybody. Um, but I want you guys to be cognizant of these things, okay? Like, I want you guys to be thinking about what it is that you're trying to accomplish. Do you want to grow the company? How much do you want to grow the company? Again, I can get you there several different ways. Okay. We can escalate your company's growth through different lending strategies and things like that. There's plenty of tools out there. I got them all. We could talk about that at a later date. Contact me, email me, call me, hit me up on LinkedIn, comment on the show, whatever you want. Like I said, we'll set up an appointment to go over this kind of stuff. But in the end, you're going to want to get that bank loan. You're going to want to get that real estate. You're going to want to be able to sell the operating company for as much money as you can sell it for. And then you want to collect that rent money while you're out golfing. All right. That should be your strategy. That should be your plan. If it isn't right now, start thinking about it. Give me a call. If you need a CPA, if you need an attorney, I know really great ones. I can refer you out, whatever you want to do. But these are the things you got to start really considering. If you're just starting a business, Okay. Start thinking about this now. If you're already in business and you haven't really thought about this, you haven't, it's like, you're just like, nope, give me all the write-offs I can take. Start changing that mentality. Start thinking long term. Okay. Like I said, we can work on that together. We can come up with a plan. Something's going to work for you, and something that's going to be beneficial for you, like I said, down the road. Um, don't just think for today. Just don't think for, April 15th or, to get your extensions, things like that. So, in closing, again, the IRS sucks. We all know that. B, like I said, paying taxes sucks, but it is a means to an end if you want to actually get somewhere in your business as far as, expanding it, buying your business. And then, excuse me, C is like, okay, work together with your team. Your team is your lender, hopefully me, a CPA, and your attorney. Okay. You work on those things. We work on them together. We get you to be where you want to go. Because here's the deal, it's your vision, it's your company, it's your baby. You make it work. Now, in closing, as I always like to say, I like to thank my Lord and Savior Jesus Christ, especially during Easter season. Hello. Uh, thank you for rising from the dead, fulfillment of scriptures, saving my eternal soul. Couldn't have done it without you, won't do it without you, and don't want to be without you. I want to thank my family, my wife, and my kids for supporting me through all this, just being the backbone, of the whole Flowers family. And then I want to thank my friends, you know, especially Mario Aguirre, with Fallen 360, who got me started in podcasting. So if you don't like this podcast, it's Mario's fault. It's not my fault. All right. So, like I said, that's the end of the show for today. Subscribe to the show, go on the YouTube channel, get it on the podcast. If you have questions, comments, concerns, feel free to hit me up. Give me all the comments you want. That's great. But again, subscribe to the show because we're gonna have that board of directors on. I'm gonna have CPAs and attorneys on. We're gonna have that little round robin discussion, things like that. Plus, I'm like I said, working on. I've already got several interviews lined up with some great people that you're gonna want to listen to. So stay tuned. Here's the deal.